Hey everyone, Tom here. Today we'll be talking about the latest stock market news in what is shaping up to be one of the biggest news weeks that we've seen all year. We'll also be talking about our thoughts in terms of technical analysis for the S&P 500, gold and silver. Have gold and silver just signaled the top is in for now? Stay tuned. So as we like to do in these videos before we get into the technical analysis, we just want to cover off some of the key economic events that you're going to be needing to look at over the rest of this week. In terms of what's happening pre-market, this is the screener that I like to look at, and it shows me a bit of a synopsis of what's going on in the market right now. It's pretty swingy in terms of up and down in the stock markets, but really it's all been about gold and silver and other precious metals during the Asian session, and we'll talk about that in just a minute. So to start with the economic calendar this week, we have Fed Chair Jerome Powell, the printing press himself, coming out on Wednesday and telling us whether the printers are still hot or not. On top of that, we have the GDP on Thursday, and while this figure is basically kind of half known, it's still that one where there's meant to be a massive amount of change. So I think this will be an important GDP figure still. And then on Friday, July 31st, we have, of course, the deadline in terms of these $600 checks are running out. Will we see another $1,200 single stimulus check to everybody as well? We don't know yet, but this will all be talked about, and it looks like there'll be something, we just don't know what, and everyone wants that July 31st deadline. To make matters even crazier, we have some massive earnings right now. If we just look at this chart in terms of the most anticipated earnings this week, these are some of the biggest companies in the S&P 500. Notably, of course, Facebook, Amazon, Apple, Alphabet, all this week, AMD, Visa, McDonald's, eBay, just to name a few today. So this is a massive week of earnings, and it will surely be the one that sets the full sentiment. And of course, that's why the Fed, and of course, that's why Congress want to get a lot of things done. As if some of these companies start missing for whatever reason, it could cause a massive sell-off in the stock markets. So as we like to do, let's get stuck right into the technical analysis. And first up is silver. Now, I've put silver on a weekly chart just to show the turnaround since March on silver. So silver went as low as $11.62 in spot and as high today as $26. And it's currently trading around $23.226. Now, this is important to note because not only have we had a massive increase in price recently, but when it blew past this previous resistance over here, it did so in style. What usually happens with markets is when they go parabolic like this, they have an incredible move followed by an incredible amount of instability or volatility. We've pretty much seen that now. So this is the type of thing that you see usually when there's a top in. What does the market do now? It usually does something like this, where basically it will move around within this zone, potentially test or retest highs, similar to what the Nasdaq's actually doing right now. And then it will come back down and test lows, and it will create what's called like a distribution, or the final phase after the market has moved. If it moves higher, usually once it moves this kind of volatility, you will see consolidation. And if it moves lower, obviously it'll form a base somewhere. Maybe this is the base that's forming today. And then when it breaks through that, it will go back to the next level that makes the most amount of sense. The reason you always know that this type of thing is coming is it generally happens around a key psychological level. Of course, with silver, in this case, it's the $26, and with gold, it's that $2,000 an ounce. If we go out to a monthly, you can kind of start to see why this zone really became so important for the market to get to. Notice that when silver did this last time, and this all happened pretty much around that period after the GFC, silver went parabolic. So just like now, silver had a parabolic move, very, very quickly went up, had a literal month where it went from $37 an ounce all the way to $50 an ounce, and then fell off. And this is the type of thing, it's called like a blow off. And this is what happens in the markets. You usually see it form a base, and there's some good trading opportunities within these zones. So it looks like it's signaled the top for now. This is a clear level of resistance where previous support over here on the left-hand side will act as resistance. And this is why top-down approach and what we cover every single week is so important. If that's something that interests you and the idea of going from a monthly, weekly down to a daily and then smaller timeframes is something that you think makes a lot of sense, remember to subscribe and of course hit that alert button on our channel. So for now, it looks like silver's top is in. And where to next? Well, probably somewhere where it'll hover between kind of this 26 and potentially down to the 21 kind of range where it found previous resistances. It also found resistance over there on the monthly, so that will be the key zone. So silver will be trapped for a little while, it looks like. I'm not saying it doesn't go even higher past the point, but the next level that you'll want to be setting alerts for is if it ever breaks past this high, that would mean probably breaks past, consolidates underneath, and then moves to the next zone, which on the monthly will be up here. It's important to always have these lines present so that you know why the market is topping out at certain levels. When we take a look at gold, it's a similar kind of occurrence in terms of what we talked about yesterday. This happened all at the same time. Silver went crazy at a very similar time that gold went crazy. And last time, of course, gold hit that $1,900 high and had the blow off. It had that big kind of move up, similar to right now, and then it had the consolidation after that, which provided good channeling or distribution trading opportunities. Now, gold is going for that $2,000 an ounce, but like we know, usually whatever you expect, the market will get close to it and then it will sell off for the first time. It usually does so very aggressively. Let's take a look at the daily now just to show how big today's movement has been in gold. We've gone from $1,905 an ounce all the way up to $1,979 an ounce. And considering how big gold is as a tradable asset, that is a massive swing. And again, it shows that kind of instability with this level and with this move that's happened. We talked yesterday about how the market likes to kind of mean revert to like the 20 moving average, and it is very far away currently from the 20 moving average. So what may happen is one of two scenarios. Most likely, we hover in a range up here with some pretty nice volatility each way, and the 20 moving average slowly catches up. Or we come right back down and we test something like the 20 moving average. The reason why it seems to be topped in is because, again, if you see this type of volatility after a large move, it usually means that that level is going to act as a psychological area where people will just sell time and time again because they know what happened last time. They want to take their profits. They want to get out. It would take big market movers to push it past that level. So what about for the S&P 500? What's going on there? Well, the first thing we're going to do is we're going to check the real market closes yesterday. And it was quite a bullish kind of move, as of course, there's a lot of expectation that not only will earnings kind of meet their terrible expectations, but they'll still meet them, that we also will see Congress and possibly the Fed further support the markets. That's the general gist right now. The markets have usually been bulling or signaling moves up into these events. And that's because the market has learned that the government and also the Fed do not want the markets to drop. So they're basically saying we create the instability before it, we get close to bear signals like we're on the NASDAQ right now, right on those kind of levels, and then we're going to show stimulus. And the market's kind of preempting that right now. So that's a little bit worrying. I would have rather it was just sitting around there and it just kind of whipsawed between the range, and then we found out the news later on this week. From a technical analysis perspective, everything's on the smaller timeframes right now. So we want to go down to something like a 4-hour just to see what the signals are showing us. Well, one of the things is that it's kind of finding support here on the 50 and it's broken past a new high. So when it broke past this 32 kind of 50 zone, it just got above it. That's important because this zone here was previous support on the bodies and then acted as resistance, and then acted as some form of resistance again. So really, once it triggers past here, high likelihood it gets back up to this high zone, and then of course, maybe it's there for the end of the week in terms of it'll be at this zone. If it gets past this zone in terms of the 3200 now, that's going to be the sell trigger, and what that would mean is that we are seeing a peak, a trough, a lower peak, and a lower trough, and that would be a strong signal. So I think 3200 is clearly shown on the smaller time frames that it is a very solid base of buying. So what's happening on the 1 hour is really more interesting than probably any other time frame on the US 500 right now. And the reason why is we have previous kind of support becoming resistance, then becoming support. And we can only see this when we drive down into the smaller time frames. We've formed that nice base off that kind of 3200 zone, and that then has been considered with 3. So we've got 3 touches of the resistance before breaking out. It makes sense, like we always say, there's always usually a chance of getting the more conservative entry on the smaller time frames. It's come back, tested this level, and now we're seeing a bullish hammer over here on the right-hand side, followed by some decent little bullish momentum in the first minute here on the candle. I'd like to see it get past all of these moving averages, and then what that will mean is when the market gets up here, all of these moving averages on the 1 hour, being the 200, the 20, and the 50, will act as dynamic support, just like they'll act as dynamic resistance right now. So we want to see the market move up, then possibly just come down, touch it, and then of course the next resistance will be here, and then once it gets past that zone, we're going to trigger what we said on the 4 hour. So it looks like there's going to be a bit of swing inside of the US 500 this week, waiting on a lot of news. Would it be my preference to trade this week? Absolutely not, because we want to see all of this news play out. There's just too many absolute unknowns right now in the market. It's one of those times where it's sometimes better in terms of this instrument to wait and see, because we can't trigger exactly what is going to happen. So let's just talk about this NASDAQ here, and it's very similar to what we were talking about with gold, but not the kind of crazy move that we've seen on gold in the last kind of 24 to 48 hours. When we have the NASDAQ, we do have a clear double top pattern here, and of course we've got a clear base of 10,500. You'd be wanting to set alerts down under here if you're a bear in the markets. And of course, if you're wanting to trade within the range, you can do so with 10,500 kind of being that first potential buy area. Obviously, it's just my opinion on these types of things, but they're the kind of zones that you're looking at each week. And of course, 11,000 is that top end resistance where a lot of profit will be taken each and every time until this effectively double top or channel is broken. So this week it's all about news, and it's of course all about making sure that you're safe in the markets. So of course always have a plan, like we always say on this channel, and that is the most important thing when it comes to trading or investing, having that plan. If you enjoyed this video, please make sure to subscribe and of course like the video, and comment down below which index you're going to be looking at if you're looking at bearish or bullish signals. Which one do you prefer to show you the way through the markets? Stay healthy, everybody, and of course, happy trading. Bye.